Welcome to the Deep Dive. We're here to unpack key resources, giving you the essential insights to stay ahead. Today, we are diving into a real heavyweight. It's often called the Bible of Technical Analysis. Technical Analysis of Stock Trends by Edwards and Magee. Our goal here is pretty straightforward. Help you quickly get what this book says about price moves reflecting market psychology and, why it's still such a cornerstone, even though it first came out way back in 1948. I mean, the 7th edition keeps the core principles, which is pretty amazing. So let's jump right in. What's the big idea here? Why is this book so significant in trading? What's the core truth it gets at?
Well, what's really key, I think, is how it framed the whole idea of looking at charts. It lays out this central idea that what you see on a price chart isn't just random noise. It's actually a picture, like a footprint, of the market's underlying psychology. Investor behavior, basically. Sort of decoded the visual language of the market's collective feeling.
Okay, so it's linking those squiggles on the chart directly to human emotions and decisions, the why behind the what. And you can see how that would guide traders generation after generation. So if it decoded the psychology, how did it make that practical? What tools did it give traders?
Right, exactly. Its big contribution was explaining the basics really clearly. Things like trend lines, chart patterns, price formations. These aren't just, lines you draw for fun. They're essential tools. They give you a framework to see the market structure and, maybe anticipate what's next. They're powerful because they take all that complex market stuff and make it visible, recognizable. Take trend lines, for instance. Sometimes people skip over them, but they're just about connecting, say, 2 key lows in an uptrend. That line then shows you the potential support, the direction, the momentum of the price move.
Right, the basics. But then it gets into the patterns, which is where I think a lot of people find it really interesting. The book talks about continuation patterns and reversal patterns. Could you give us some examples? What do they actually signal?
Yeah, this is where it gets very practical. The book goes deep into patterns like the head and shoulders, classic reversal pattern. Visually, you see 3 peaks. The middle one, the head is higher than the 2 shoulders on either side. But the key insight isn't just seeing the shape, it's understanding why it forms. Each peak, especially that second shoulder, represents buyers trying and failing to push the price higher. It shows conviction shifting under the surface.
Okay, so it's like seeing the effort fail in real time.
Precisely. Then you have things like triangles, symmetrical, ascending, descending. They're fascinating. They often show the price getting squeezed into a tighter and tighter range. It's like energy building up, usually for a breakout. They're often continuation patterns, suggesting the old trend might resume after a pause.
A pause, okay. Like the market catching its breath.
Kind of, yeah. Or flags, which are similar. Short, sharp pauses in a strong trend, often leaning against the trend, before it takes off again. And then you've got double tops and double bottoms. Very strong reversal signals. You see 2 clear peaks or troughs around the same price level. It's the market saying, nope, not going past this point. A clear rejection, signaling a potential turning point. The book shows these patterns repeating throughout history, indicating likely moves based on, predictable human reactions.
It's one thing to see the shapes, like you said, but the book goes deeper, beyond the lines. What's that core psychological truth it reveals? The crowd behavior aspect. Why are these patterns so persistent?
That's the real genius of it, I think. It connects the patterns directly to the collective mind, the crowd. It explains why the market moves like this. These patterns aren't just technical artifacts. They are fear, greed, hope, despair, all playing out visually on the chart. So for you listening, understanding these patterns isn't just about chart reading, it's about reading the market's emotions. They're like the emotional fingerprint of everyone involved.
That makes a lot of sense, connecting the technical to the emotional. But okay, how does the book help a trader actually use this knowledge effectively? How do you apply it in practical trading without getting burned?
Good question. It does offer practical guidance, identifying potential entry, exit points based on these patterns. But crucially, it hammers home risk management. That's a huge focus. It's not just spot the pattern, place the trade. It's about how you structure that trade, how you manage your capital, defining your potential loss before you even get in. It pushes for a systematic approach, not just analysis.
Yeah, that risk part is key. It's amazing, though, that a book from, 1948 still holds up. Technical analysis, as they laid it out, seems to have really stood the test of time, even with today's crazy fast markets.
It really has.
Are there limitations, though? Maybe areas where its age shows? What are its biggest strengths and weaknesses today?
Oh, definitely strengths. It's incredibly comprehensive. I mean, it covers so much ground in classical technical analysis. And the knowledge feels timeless because it's rooted in human behavior, which doesn't fundamentally change that much. Plus, the use of real charts, even old ones, is super helpful for learning.
But the weaknesses.
Well, you mentioned the age. It is dense, it's theoretical, it's definitely not a quick, easy read for a total beginner. And yeah, some examples feel a bit, let's say, slow-paced compared to modern markets. High-frequency trading and algorithms weren't exactly a thing back then.
Fair enough. It requires some effort to get through. So, wrapping this part up, what's the final verdict if we had to rate it or place its value today?
You know, despite the density, it's easily a 4.5 out of 5. Maybe even higher for its foundational importance. It really is a must-read if you're serious about understanding trading and investing from the ground up. Sure, maybe modern traders want quicker guides, apps, whatever. But this book, it's the cornerstone, an invaluable reference for truly getting chart patterns and market trends. So much of modern charting is built on this foundation.
Okay, so a definite cornerstone. We've covered a lot today, really digging into technical analysis of stock trends. We've seen how it connects the mechanics of charting with the deep psychology driving markets. It's clear why it's considered such a vital resource for anyone looking to master charts and trends.
Absolutely. And maybe a final thought for everyone listening. Think about how this timeless knowledge of market psychology, the stuff these classic patterns reveal, might actually help you understand today's markets, even the newest, craziest, most volatile trends you see. Because the underlying human reactions and their patience, the fear, the greed that create these patterns, they often stay surprisingly consistent, even when everything else changes.
That's a great point, something to chew on. We hope this deep dive gave you some valuable shortcuts and maybe sparked some new thinking. Thanks for joining us. Until next time, keep exploring.